This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back as always to the Research Talks podcast here from Stockbox. How are you doing, Alan? I know you've had a busy week.
Yeah, I've been battling what I think is the edge of a flu bug. It's been going around our family like wildfire, and I've tried to sort of get plenty of fresh air, stay in the sunshine, and eat loads of fruit and vegetables. So at the moment, it's a bay, but I can just kind of feel I'm not quite 100%. So
Yeah.
hopefully the companies I discussed today that you won't notice that in my little presentation here.
Yes, indeed. Well, let's hope it all goes okay. Well, today we're going to be talking about a mining company, a tech company, and then an IT or an IT company, isn't it, with Brave Bison?
Well, Brave Bison are a digital marketing company, so yeah, they're sort of in
digital marketing. Okay,
yeah. So they are sort of IT to an extent, but yeah, digital marketing.
Yeah, so we've got a mixed bag today, but that's good. So Brave Bison is something that we've not talked about before, so looking forward to hearing the synopsis of that company. But we're going to start with Kavango, then we'll talk about ONDO InsurTech, who recently got a placing away, and then move on to Brave Bison. So Kavango Resources then, Alan, I mean that share price doing pretty well recently. It's definitely picked up some traction, probably off the back of all the gold exploration finds and small-scale production heading into larger-scale production as the plan is over in Zimbabwe, of course, given the performance of the gold price as well.
Well, indeed. And I think Ben Turney, the chief executive, and his team should be congratulated on really turning the company around because, of course, Ben came into Kavango as CEO originally, and he had the Kalahari Copperbelt assets. He also had the Kalahari Suture Zone assets, and I think the KSZ, while there's still some nascent potential there, it's the work they've undertaken, I think, needs to be examined in more detail. And I think as a mining company in this current marketplace, we've seen other companies pivot into opportunities for near-term production. We've seen companies like Fulcrum Metals, we discussed the other week, pivot into buying tailings projects to move into production to generate revenue. And that, of course, then puts a completely different dynamic on the investment proposition when you go and talk to investors. And Ben has really, really delivered this year. I mean, 2024 is really going to be the year, or really has been the year so far for Kavango. So Kavango has its two principal assets are in firstly Botswana. Of course, you've got the Kalahari Suture, the Kalahari Copperbelt assets. The KSZ is also part of the company too, but they're not actively working on that at present. And of course, middle of last year, they bought in, or they put together a relationship with a company called Pure Bond, and the Pure Bond came in with a funding package to drive the business forward. 1.4 million, a total of a 6 million investment package was agreed in two tranches. And what this enabled them to do was to advance the projects and also buy into some projects in Zimbabwe. So in the Kalahari Copperbelt, the company has the Karakubis licenses which is a prospective license on regional trends that over the years have delivered some major discoveries, including the Kavango Resources discovery, of course, the Moto Copper Mine, Rio Tinto, all operating in the area. And then also in July last year, the company signed a 2-year option to acquire the Nara Gold project, the tailings project, which also consists of 45 contiguous exploration claims, and also a 6-month option to acquire the Hillside and Leopard projects. And this is where really the focus has been for Ben and the team. So things have really started to accelerate since February. The drilling work was undertaken at Hillsides, and indeed gold production from the tailings dump there commenced. And I mean, it was a really key threshold moment for the company to move from being an explorer into a production company. And the company were aiming to double production to 1 kilogram of gold per month. At the same time, they also established an initial mineral resource estimate at the Nara Gold project. And this was updated last month, April, where the company reported a measured resource estimate of 77,604 tons. That's 1,346 ounces of gold. And then, of course, prior to that, the inferred resource, 221,900 ounces, which equates to 4,637 ounces of gold. At the same time, the company has also been drilling. They have assay results back from Hillside, and they've produced some pretty impressive grades. And Ben said that the grades surpassed expectations and underlined, the results really underlined Hillside's potential to host in excess of 1 million ounces of gold. Couple of results from the 2.5 meters at 29.08 grams per ton of gold. That's pretty impressive by any standards. Also, a further 1.3 meters at 1.8 grams per ton. Also during April, the company announced an accelerated book build and raised just over 3 million. Of course, Pure Bond involved with that too. And the company signed an agreement at that point to pay $600,000 to the sellers of Hillside, and also $50,000 to Leopard South. So taking up those options to make those purchases. Now, also in Botswana in April, the Kavango conducted the helicopter survey and identified on the KCB at the Karakubis prospect the defined trend underlying what's referred to as the Kara undercline. And Ben Turney said at that point that he was quietly confident that the Kalahari Copper Belt, or KCB, will deliver for Kavango. And indeed, we just heard from the company literally an announcement that a contract for drilling at the Karakubis prospect has been agreed. They have a 5,000 meter diamond drill program planned, which will be between 10 and 15 holes. That starts in a few weeks in June, and the aim, of course, is to prove up the copper mineralizing system at Karakubis. Back to Zimbabwe, the company also undertook drilling at that there is a number of prospects at Hillside. Of course, I mentioned the results from Prospect 4 just now. Prospect 3 also delivered over 40 meters. They've estimated an average of 0.5 grams per ton, and the nature of the gold and the mineralization there leads to a conclusion from the company that they've confirmed what is likely to be an extensive mineralized system, and also the area may well be open to or may be open to open pit mining. So, of course, that's a very that's very much a cheaper form of mining and extraction from the ground. So, tremendous progress in summary by Ben and the team. I mean, the share price has rocketed really since the end of February. I mean, it was 0.65p at the end of February, already hit highs of 1.7p. And you know, if you look at it over the past few months, you know, you're seeing these high lows being set every time. But what I think Ben and the team is showing is the pace of developments now, both at the Nara Gold project, the tailings dump, that they're in production, so they're generating revenues from that, aiming to produce 1 kilogram of gold per month. And then, of course, the other prospects, prospects 2, 3, and 4 at Hillside are delivering great grades and giving the team a clear idea of how they're going to mine that prospect in future. And then, of course, we have Karakubis, which is seemingly positioned nicely to become a major copper asset for the company. And of course, we all know what's happening with the copper price at the moment. It's busting through to new highs. A report, of course, written by Jill Baker, who works for Brand Communications. She reported, of course, that Jeremy Reeve from Trafigura believes that copper could break as high as 12,000 tons or $12,000 per ton. So, very much on its way to new highs. And I think from a timing standpoint, Ben and the team have executed this perfectly.
I think absolutely, yeah. I mean, it's great to see sort of renewed activity and interest and chatter, and of course the share price doing fairly well this week, moving back up a little bit there on everything that's going on. Of course, you mentioned the KSZ, that's a Kalahari Suture Zone there. Obviously that was a big focus, wasn't it, not so long ago? But you're at the mercy of geology and nature. You can't really control that, and there could be something great down there. But equally, by the same time, it's how much do you put into it? How much money do you spend on it to perhaps find something that could be there, but is quite possibly also not there. So I don't think it's written off completely, but I think it's great that the team have gone out to Zimbabwe there and seized up what could be sort of these nice little opportunities, particularly in gold, and then of course being active on the copper side as well in the KCB. So I think that's a good thing, not to get too hung up on something that isn't playing out perhaps as ideally as you would like, but not written off completely. So I'm looking forward to seeing how things carry on with what Ben's doing, particularly over with the gold, but then in the Kalahari copper belt as well, the KCB, because that's a very prolific area for copper, and those two commodities, as we said, performing extremely well. So I'm seeing a lot of chatter around on the miners. Talking to some people, it actually does. Dare I say it? Finally, after 10 years, maybe of 2013, I think. So 11 years actually. I've been investing in miners. We've all heard that the cycle's coming, but. Do you know, with the commodity prices where they are, the chat about the green economy, and then you've got M&A activity. I think we mentioned it maybe even last week, the Anglo-American and the BHP, and then and Anglo then sort of getting rid of or divesting from De Beers as well, because they want to focus on the green economy metals rather than the kind of the old school, diamonds. It looks like stuff is actually perhaps starting to move a little bit in this sector. It has to work its way down to the juniors, but for the first time in a while, I'm actually seeing extremely positive signs for the mining sector.
I agree, Mark, completely. I think the Anglo BHP and the divesting from De Beers, that's one. Then, of course, last year Rio Tinto invested $40 million into Sovereign Metals, the Cassia rutile and graphite project, and of course that's really progressing rapidly now. We've heard from Sovereign over the past few weeks about the graphite processing and the quality of the graphite that's being produced. So it's all happening, and I think this is how the industry works. The big mining companies are under pressure all the time to find and invest into these projects. And indeed, yesterday I interviewed and spoke with Rob Marsden, the new chief executive at Anglesey Mining, and he worked for Rio Tinto for many years, and he was actually in charge of the department in London that went and invested into these projects. And of course, there's a tremendous amount of due diligence and study that goes into each acquisition. But these mining giants are under even more pressure now, because with a new cycle coming, they'll want to position themselves and get in with the companies that they feel can deliver. So, going back to Kavango, I mean, the focus is Karakubis, the copper asset there, the cash generation from the Nara tailings dump, the exploration potential and the potential for open pit mining at the Hillside project, but also with the KSZ. I mean, that's a a project that if you go back to the website, and I remember looking at the website a couple of years ago, there's a complete 3D model of the KSZ. It's very similar to the Norilsk nickel and or polymetallic mine up in Siberia in terms of its geology. So in that sense, a lot of the groundwork has been done already on the KSZ. So it's quite conceivable that once these assets are propelled further down the road, it could well be expedient for the company to revisit the KSZ again. So really, there's a store of, aside from what we're seeing on the ground from Kavango at the moment, there's a store of nascent value there with the KSZ assets that the company holds. So it is a really exciting time.
Indeed. Well, let's move on and talk about ONDO InsurTech then.
Yeah, indeed. Well, ONDO, we've of course spoken about ONDO on a number of occasions, and I think it's a great little company. And of course, go back a couple of years, just over 2 years ago, ONDO reversed into what was then a cash shell. The Spinnaker acquisitions reversed into Leakbot Limited and became ONDO InsurTech PLC. And of course, ONDO is Japanese for temperature change. So Leakbot is an IoT, Internet of Things based claim prevention system, which can reduce the cost of water damage claims by 70%. And this is the biggest source of payouts that insurance companies have to make. It's water damage. It's a real bane of an insurer's life, if you like, because this is something that probably happens more frequently than anything else. And what the Leakbot does, it's very simple. It will alert that a leak is taking place. It'll alert either the homeowner or go direct to the contractor. So the people are alerted and the fix is kind of nipped in the bud before it gets too serious. And of course, this is resulting in huge cost savings. And what we've seen is that the chief executive, Craig Foster, and the team have gradually rolled this out across insurance companies, and they're just building this network now. And I'll go into some of the companies in a minute, but just really a bit about Craig Foster. Of course, the company effectively came out of Craig's work for HomeServe. And of course, if you know about HomeServe, they're the company that are very active in direct mail, in that you get a lot of letters through your door asking you to insure your house or insure your contents using HomeServe. And Craig worked in the labs and he developed Leakbot in the labs there. And indeed, at the time, he won the award from Insurance Times as Tech Champion of the Year. So, he's a very sort of capable and able fellow. But what they've done, what Craig and the team have done since bringing this forward, that they have signed contracts galore. They've rolled out both in the UK, Portsmouth Water, Southwest Water, and they've rolled out in Europe, rolled out in Denmark, across Sweden with Sweden's largest non-life insurer. And then April last year, they signed a partnership with WNS Holdings, which are a New York Stock Exchange-based company running claims operations for many household name insurers throughout Europe and the US. And Craig said at the time it was a significant milestone for the company. And indeed, the company grew on the back of that, built, continued and expanded on existing contracts. And then sort of in December last year, the company raised a further $1 million, and shortly after that signed a new contract with Selective Group Insurance Holdings in the USA. And then, of course, we had the half-year results or a trading update in April. Craig and the team reported half-year trading was in line, and also the trading or the trading for the full year to the March the 31st, 2024 is also in line with expectation, which is what you want to hear. But also the company was seeing very encouraging feedback from its US launches, and Nationwide Insurance in the US have started to deploy Leakbot across certain states in Cincinnati, Ohio, and also in St. Louis, Missouri. Installation rates are well over 70%, and quote unquote well ahead of expectation. And indeed, the officer there for Nationwide said that smart home program, which is what LeapBot is operating under, will be a key differentiator in home insurance going forward. And then, of course, we just heard from the company has raised a further 3 million at 14p. There's also an open offer with that to raise a further 1.2 million. And in this, the directors all participated, which is something again that you want to see. You want to see your board have skin in the game, and certainly Mark Wood, the chairman, and Craig participated in that. So what the proceeds will be used for? They'll accelerate and further roll out across the USA and maintain growth in the UK and other Scandinavian markets. And I think I've said this before, but I would probably expect to see Craig and the team developing something else alongside this. But of course, that's yet to be announced. But I think the company have really cornered this market now. The US is the biggest market to crack. They're in the process of cracking that already. They've, really, if you think about it, since April last year, they've absolutely put their skates on and got on with it. And this rollout's taking place now. And once LeapBot is installed, once that has been rolled out, it's in every house or every insured house across the USA. That's a real cash cow of a business. You're just going to carry on generating money from that, and it's going to be very hard then for that. So long as ONDO and LeapBot stay ahead of the curve, it's going to be very hard for an insurance company to switch that off. And I think that's what's attractive about this. They've really cornered the market well, and they're exploiting it nicely.
Indeed, yeah, indeed. And now they've got the funds ready to go, and it was nice that they were able to do an open offer as well to existing shareholders, really, that they can take part in that. It's not often you see that. It's normally done in it's a surprise, isn't it, to the market? So I've seen that done twice now. Actually, Kavango and ONDO have done that. So Indeed. That's really good. Yeah. Really good. Okay, excellent. Well, let's finish off then, Alan. Let's finish off with Brave Bison. Yeah, let's finish off with Brave Bison. Brave Bison, great name.
Yes, it's a great name for a company, and one does wonder where it originated from. Was it a discussion in the pub, or did somebody have this image of a stampeding bison being very brave? But anyway, it doesn't matter. So the company, Brave Bison, BBSN, the share price is currently trading at 2.55p, giving the company a market capitalization of 32 million. Shares have traded as high as 2.9p and as low as 1.5p in the year. But a nice steady growth chart. And so the company basically provides digital advertising technology services. It's headquartered in London, has a workforce across 10 countries, and it has 4 tiers to its advertising arsenal, if you like. So they have Brave Bison Performance, firstly, which plans and buys media across social media. That's on Google, TikTok, and also provides search engine optimization and digital PR services. And then last year, the company acquired Social Chain, and Social Chain creates content for social media platforms and also works with influencers to create content. Okay. And the company said recently in its results announcement, full year results, that the Social Chain acquisition has absolutely transformed the advertiser proposition. So the third or the third sort of string to the bow, if you like, is Brave Bison Commerce, and this division builds e-commerce platforms to support digital commerce operations. Customer examples there are Furniture Village and Fiskars. And then, of course, fourthly, you've got the Brave Bison Media Network, which has a portfolio of channels across YouTube, Facebook, Snapchat, TikTok, and Instagram, with well over 1 billion monthly views. So that's a real force to be reckoned with. So we had a really strong set of full year results in April, announced in April to 31st December. Turnover up 13% to 35.7 million, Net revenues and gross profit up 23% to just under 21 million. Adjusted EBITDA up 42% to 4.3 million, and basically top right hand corner stuff all the way. So earnings per share were up 18% to 0.29p. Net cash now up 10% to 6.8 million. And the company said at that point that the current trading outlook was very strong. They were trading ahead of prior year and very confident of meeting expectations in 2024. Then all the fun started. So buoyed by the cash at the bank and this strong trading performance, the company announced on the 13th of May, a few days ago, a possible all-share offer for a rival company called the Mission Group. Now, the Mission Group, Epic code TMG, is currently trading at 24p, traded as high as 52p on the year and as low as 10p. It has suffered from some late payments and also carries a fair amount of debt. It's got about 30 million in debt compared to Brave Bison's 6.8 million in cash. So Brave Bison offered basically 11.5 of its shares for one Mission Group share. Now, Mission Group has a market capitalization that's less, 22 million. It's less than Brave Bison. So the offer was 11.5 Brave Bison shares for one Mission Group share, valuing Mission Group at 29p per share. So, well in excess of where the current share price stands. Now, the rationale behind this is the team at Brave Bison want to create a media group that is going to be run by the Brave Bison team, Oliver Green and his management team, and they believe they can create an enlarged group with full year pro forma revenues of 120 million, adjusted EBITDA of 14 million, and basically offsetting that debt that Mission Group carries. Brave Bison said it believes Mission Group debt levels are unsustainable as it stands, and the company have basically come back and refuted that emphatically and said that they believe the offer materially undervalues Mission Group's offering. Revenues are recovering, so on and so forth. Now, yeah, it was a cheeky move. It was a hostile bid, if you like, but it's great when this sort of activity starts to come back into the market. That shows really that we're in a market that's starting to recover, and I think the marketeers out there recognize that, and they're seeking to position themselves before the big jump in revenues come. But of course, if you're on the receiving end of hostile bid, as Mission Group are, you will take the view, well, no, it materially undervalues us. But actually, it doesn't. I don't think it does, because the shares haven't moved from 24p. So, at 29p, I think there would be a good offer there. And what that would do, the combined group would have increased revenues. It would also be much more attractive to fund managers to invest into. And also, the Brave Bison have said in their rationale that they believe they can work. They can. Mission Group is also a digital marketing agency, I should add, and the company has or it owns a chain of digital marketing groups operating around the world. So there are great synergies. There's great potential for economies of scale, but also there are great cross-sell opportunities too. So the Bison clients can be upsold with Mission Group client resources, and vice versa. And Mission Group clients can be upsold with Brave Bison resources, and they've actually said as much. So there's the rationale behind it. Has to be said that major shareholder DBay, and we've heard of DBay, it's an opportunistic investor. They hold 10.7% of the Mission Group, should I say, and they have also come out to say that the offer is unattractive. So clearly they see value in Mission Group as it stands. The latest development at Brave Bison Group is that Michael Ashcroft has increased his stake in the company. He owned just over 20%. He now owns 23.7%. So that in itself is an exciting move. So, I think all eyes on what happens next, really. But I think either way, clearly there's opportunity in digital marketing. Brave Bison have transformed through the acquisition of Social Chain. Who knows whether this acquisition will go through or not? They may have to pay a higher price, but I somehow doubt whether Brave Bison will increase their offering at present. But who knows? Watch this space.
Interesting, very interesting, Alan. Yeah, well, we all know the power of social media marketing, and it seems, well, from what you said there, that Brave Bison cover the whole suite, if you like, of marketing and digital advertising, and indeed down to the actual e-commerce side of it as well. You know, presumably that is is it a method that people can, if they're selling goods, for example, they can use that platform, and then of course make use of all the marketing that comes with it.
Exactly. Yeah. So if you want to sell your product on social media, this place really is a one-stop shop. You can go there. Your content will be created. So that content can then be you can then get influencers out there on Instagram, for example, to endorse your content. Say, oh yes, I love this. Oh, isn't this face cream fantastic? I love it. It's wonderful. And then of course, the company will build a platform, an e-commerce platform for you. So if you're selling the product that way, they can build a platform for you to take sales. And then of course they can then further disseminate their content out through their own channels: YouTube, Facebook, Snapchat, TikTok, and so on. So yeah,
are they targeting their clients? There can be anyone, from almost small businesses down to massive big brands.
Absolutely, yeah. The entire range. I mean, as I say, two client examples there: Fiskars and Furniture Village. So those are two big operations. But yeah, I mean, digital marketing is the way forward, as we all know. It's the way companies do business now, and bring it all together under one umbrella. Brave Bison have done a very good job, and I think the revenues speak for themselves. The fact is that their current trading is well ahead of last year as well. So more of the same, and also they don't have any debt, and that's key. I think in a business like this that's highly geared, if you're well, I say highly geared, I mean, goodness me, they turn over 35 million, and I mean their market cap's 31 million, so it's less than cash, really. So you take that into account. They're not really that highly rated, but clearly they see an opportunity to put it together with Mission Group and create a larger agency that will be more attractive in the marketplace, and possibly more resilient to any downturn too.
Yeah, indeed. Well, thank you very much, Alan, for introducing Brave Bison for us today, and of course talking about Kavango and ONDO InsurTech. And until next week, have a good weekend.
Thanks, Mark. Have a good weekend.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.